Welcome to what has really become one of the most intriguing financial sagas of 2025. The UK's digital pound. This isn't just about, a potential new currency. It's a pretty dramatic story. It went from this, ambitious government initiative to potentially being shelved in just a matter of months.
It really did.
It's a narrative that I think perfectly encapsulates that tension between innovation and tradition, public versus private sectors, and frankly, the fundamental question of who controls the future of money.
It truly is a stark turnaround, isn't it? I mean, just 6 months ago, the Bank of England seemed pretty confident launching that digital pound lab, outlining a clear design phase.
Right.
They were talking about a potential launch later this decade.
Right.
And now you fast forward to July 2025, and we're seeing reports suggesting the whole project is facing a major reevaluation, possibly put on indefinite hold.
And that's exactly what we're diving into today. We're going to unpack this using, a whole stack of current information. We've got official Bank of England documents, expert legal analyses, global CBDC tracking data, industry perspectives.
A lot to get through.
Yeah, and a special note here. The core research for this deep dive was meticulously pulled together by the team at Expert Trader UK. They've really ensured we have the most up-to-date and relevant insights.
Which is crucial because the stakes here couldn't really be higher. Globally, you've got, 98% of the world's GDP represented by countries exploring digital currencies?
98%? That's staggering.
It is. And look at China's digital yuan. It's already processed nearly $1 trillion in transactions. India's digital rupee. Exploding, up 334% in just 1 year.
Wow.
So against this backdrop of, rapid global acceleration, the UK potentially stepping back isn't just a minor adjustment. It feels like a really significant, maybe even defining shift in the global monetary landscape.
So our mission today isn't just to tell you what's happening from a tech or policy angle. It's digging into these profound questions of privacy, control, innovation, and the changing role of government in our financial lives. We'll explore not just the what, but crucially, the why it matters to you, whether you're deep into finance, tech, or just curious about where money is heading.
Okay, let's jump right into that dramatic reversal of 2025 then. Back in January, the Bank of England was projecting, undeniable confidence.
Yeah, they seemed quite bullish.
Their publications talked about launching the digital pound lab, outlining that design phase, discussing a launch in the second half of the decade. And this was based on detailed analysis, a lot of which actually lined up with the comprehensive reports from the team at Expert Trader UK.
Yet, just 6 months later, Bloomberg drops this report suggesting the Bank of England is considering shelving the whole thing, citing growing skepticism. That's a U-turn that has certainly got everyone talking.
Definitely. And it really highlights that tension we mentioned earlier.
What's maybe most striking is the sort of philosophical shift it seems to represent.
Exactly. Instead of actively building a public digital currency, the bank has reportedly been, and I quote, privately urging the banking industry to instead accelerate payment innovations.
Right. From public build to private push.
It's not just a policy tweak. It's a fundamental question, isn't it? Who innovates for the public good in finance? And, what happens if the private sector doesn't deliver on key things like inclusion or resilience? Does the government then play catch up? Is it too late?
And this pivot is happening while other major economies are, hitting the accelerator. You mentioned the European Central Bank pushing its digital euro forward explicitly for geopolitical reasons, they say, trying to reduce reliance on U.S. payment systems.
Precisely. And meanwhile, you've got China's digital yuan and India's digital rupee seeing that explosive growth, massive transaction volumes we talked about.
Contrast is pretty stark.
It is. You hear ECB board member Piero Cipollone saying in July they welcome an ambitious pace for the digital euro legislation. Then you hear Bank of England Governor Andrew Bailey questioning if a digital pound is even needed if private solutions work well.
It really raises that big question. What does this divergence mean? Are we seeing different regions viewing the central bank's role in a digital economy very differently? Two paths emerging.
It certainly looks that way. You have to wonder if the UK is making a calculated strategic pause or if it's potentially missing a key moment in global finance.
Good question. But before we get too far down that road, let's maybe just quickly clarify what the digital pound is supposed to be. For anyone listening who isn't deep in the jargon, a CBDC, central bank digital currency, what is it in simple terms?
Yeah, good point. Essentially, think of it as a digital version of the cash in your wallet. issued and backed directly by the central bank, in this case, the Bank of England.
So like a digital pound note.
Exactly. The vision was a digital form of cash, a banknote for the digital era. It would have been a direct claim on the bank, stable in value, totally unlike volatile cryptocurrencies.
Okay.
And crucially, it was never intended to replace physical cash. It was designed to complement it, just offer another choice for people and businesses.
So just to be crystal clear, not Bitcoin, not some sort of investment, not anonymous, and definitely not a replacement for your standard high street bank account.
No, none of those things. It would be centralized, controlled by the Bank of England, and yes, it would require user identification, but, and this was a key point they kept stressing, with robust privacy protections supposedly built in from the start.
Okay. And the tech behind it. You mentioned this public-private model.
Right. It was quite a sophisticated setup they were planning, a public-private platform model. So imagine the Bank of England running the core ledger, like the secure vault holding the digital cash, but you, the user, wouldn't interact directly with the bank. You'd use regulated private firms, they called them payment interface providers, or PIPs, and external service interface providers, ESIPs. Think of them like your banking app or payment service.
So the private sector builds the front end, the apps we use.
Essentially, yes. They'd manage the customer-facing services through these digital pass-through wallets, while the underlying digital money remained that direct claim on the central bank.
Interesting. And they talked about programmable money. That sounds a bit alarming to some people.
It does, and it caused a lot of concern. The idea was to enable things like, say, automatic bill payments set up by the user. And this was a really big but, they emphasize, control would rest explicitly with the user or the private sector provider, not the government.
They promised that. They committed to seeking legal guarantees that neither the Bank of England nor the government could control how you spend your money. They even proposed holding limits caps on how much digital pound you could hold, partly to stop people pulling all their money out of commercial banks, which is called disintermediation.
So conceived as a public utility, not a control mechanism.
That was the pitch. Understanding what it was not meant to be is really key to understanding the debates and the fears that surfaced.
Right. Let's trace its official journey then. It really kicked off with that 2023 consultation paper, didn't it? Asking the public about a new form of money.
Yes, and the response was, well, unprecedented. Over 50,000 responses, which showed huge public interest, but also, frankly, deep concerns.
And the main concerns were?
Overwhelmingly, privacy and data protection. That was dominant. Followed by worries about preserving cash and also the need for proper parliamentary oversight, making sure politicians, not just the bank, had the final say.
So the bank responded in January 2024, trying to address those points. They did. They committed publicly to privacy guarantees, committed to preserving access to cash. But crucially, they also said no final decision had been made to actually build it. Instead, they announced this design phase.
Which still felt like progress, I suppose.
They did. And the January 2025 update seemed like another step forward. Plans for the Digital Pound Lab for experimentation, more detail on the architecture, positioning it within the UK's national payments vision. It seemed like it was moving along.
Which just makes that July 2025 twist the reports of shelving even more dramatic, just 6 months later. What do we think was the real catalyst for such a sudden, apparent change of heart?
Well, it seems to be a mix of things coming together. Firstly, the rapid pace of private sector payment innovation, things like faster payments, digital wallets, stablecoins perhaps. Governor Bailey himself highlighted this.
Okay.
Then growing concerns about the sheer complexity and the significant cost of building and running such a system. And finally, you just can't ignore the weight of those public concerns, especially around privacy and control.
So it's not necessarily dead in the water, but paused.
The messaging seems to be that no decision has been made, but the bank wants to be in a position to launch if eventually warranted, which does suggest more of a wait and see, perhaps letting the private sector show its hand first.
This wait and see stance feels very UK in a way.
Yeah.
Cautious. It embodies that tension that we started with, innovation versus tradition, public concern. How does this cautious approach really stack up globally?
Well, like we said, it's a massive global trend. As of July 2025, you got 137 countries, 98% of global GDP looking into CBDCs. 72 of those are in advanced stages, development, pilot, or actually launch.
72. It's a lot further along than just thinking about it.
It is. You can kind of group them. You've got the early launchers, mainly smaller economies like the Bahamas, Jamaica, Nigeria, often focused on domestic issues like financial inclusion. Then you have the big players running large-scale pilots. We mentioned China's digital yuan, nearly $1 trillion in transactions by June 2024. That's a four-fold increase in a year. India's digital rupee, 334% growth, $122 million by March 2025. Huge adoption figures.
Those numbers are hard to ignore. And the third group?
That's other major economies still in development. The EU's digital euro is the big one there. And as you said, their motivation seems quite strategic, partly about reducing reliance on American payment systems.
Geopolitics playing a big role.
Definitely. Especially after the war in Ukraine, we saw cross-border wholesale CBDC projects double, things like Project Enbridge. China's digital yuan is often framed as part of a potential shift towards a multipolar currency system.
So finance, tech, geopolitics, it's all intertwined. But the U.S. seems to be taking a different path again.
It does, on the retail side at least. President Trump halted work on a retail CBDC back in 2025, specifically citing privacy concerns. That makes the U.S. quite unique among major economies.
But they're still involved in research.
Yes, particularly on the wholesale side, for interbank payments. Project Agora is an example. So they haven't completely disengaged from the underlying technology.
So motivations really differ across the board. Inclusion here, competitiveness there.
Absolutely. Emerging markets often prioritize financial inclusion. Developed economies, like the EU, focus more on competitiveness, future-proofing payments, and monetary sovereignty. But they all face common hurdles. The technical complexity offline payments are still tricky. Those deep privacy concerns, potential financial stability risks like bank runs, and this growing question, is it actually necessary if the private sector is innovating so fast?
It's interesting that the research from Expert Trader UK highlighted this dilemma. Is the UK's caution prescient, avoiding pitfalls, or is it risking falling behind?
That's the tightrope they're walking.
Let's bring in some other expert views. What were the legal folks, the tech specialists, the economists saying specifically about the digital pound proposal?
Well, from a legal and regulatory angle, firms like Hogan Lovells looked closely at that public-private model, the role of the lab. They flagged the challenges in truly safeguarding privacy and the absolute necessity of getting Parliament's approval.
Okay, and technically?
Technically, the bank's own research admitted that getting offline payments to work securely was proving challenging. And while that API-driven public-private model sounds neat, there were big questions about whether it could scale reliably for millions of transactions every second, day in, day out.
And the economic case, was it clear-cut?
Not really. Supporters talked up potential benefits, financial inclusion, maybe making monetary policy more effective, better payment system resilience, those programmable money features. But the critics, they worried a lot about bank disintermediation.
That risk of people pulling money from banks.
Exactly. Even with proposed holding limits to try and stop it, critics questioned if the potential benefits really outweighed the huge costs and risks involved.
How did the actual financial industry react? Banks versus fintech.
Generally, traditional banks were quite cautious, maybe understandably seeing it as potential disruption. Fintechs, on the other hand, were often more enthusiastic, spotting opportunities. You also had bodies like the Independent Digital Pound Foundation being more optimistic.
And academics. Privacy experts.
Academics were divided. Sentiment analysis, like that from the University of Stirling, showed a real gap between the official positive narrative and deep public anxieties. And libertarian-leaning groups like the Cato Institute issued stark warnings, saying a CBDC could spell doom for financial privacy.
That's strong language.
Yeah.
But I also remember hearing an interesting take from, I think, John Davies at INCEP 5. He had a slightly different interpretation of the bank's actions.
Ah, yes, that was a fascinating perspective. He suggested the bank might actually be, quote, laying the ground to justify its introduction later. Meaning, perhaps this pause, this emphasis on private sector innovation is strategic. If the private sector fails to deliver adequately on things like resilience or universal access over the next few years, the bank could then step back in and say, see, we need a public option after all.
A kind of strategic waiting game. Very interesting. Let's circle back to what was arguably the biggest hurdle and probably a huge factor in this pause. The privacy and control debate.
Yeah, this was absolutely dominant. Those 50,000 plus consultation responses overwhelmingly focused on privacy, government surveillance fears. It tapped into deeper anxieties about digitization, about trust in institutions.
And the bank knew this was the main issue.
Oh, absolutely. They were acutely aware. That's why they made those really strong commitments. Promises of future laws guaranteeing user privacy, explicit statements that neither the bank nor the government would be able to track or control individual spending. They stressed these would be legally binding.
But the skepticism remained, particularly around that programmable money idea. People worried about government overreach, right? Like expiry dates on money or blocking certain purchases.
Exactly. Even though the bank explicitly ruled out using programmability for government control, saying it would be user-controlled, the technical possibility remained a source of deep public anxiety. Critics would point to international examples like China's system with its known surveillance capabilities and argue about the risk of mission creep, even in democracies. Laws can change, after all.
And this wasn't happening in a vacuum, culturally speaking.
No. You have a strong UK tradition of individual liberty, skepticism of state power. Plus, the timing, coming after the COVID-19 pandemic where government powers expanded significantly, probably heightened those sensitivities. Add to that the worry that a digital pound might hasten the decline of cash, potentially excluding vulnerable groups, the elderly, people in rural areas, those with disabilities, despite the bank's promises to maintain cash access.
So the sheer intensity of these privacy and control fears likely played a massive role in the bank hitting pause and shifting focus towards private sector solutions.
I think it has to be seen as a major, if not the major, contributing factor.
Okay, let's quickly touch on the other economic and financial implications. Beyond that risk of bank runs, what else is on the table?
Well, there was a lot of discussion about how it might affect monetary policy transmission. If the digital pound paid interest, for instance, it could change how the bank rate influences the economy, potentially a very direct tool. But as we noted, the bank suggested it probably wouldn't pay interest initially.
What about competition?
Big implications there. It could seriously shake up existing payment and banking models. Fintechs might find themselves competing more directly with traditional banks. Although the public-private model was designed in theory to harness private innovation rather than stifle it.
And the overall economic calculation, benefits versus costs.
The potential pluses were things like better payment efficiency, maybe boosting financial inclusion, enabling new programmable services, even giving the bank better real-time data for setting policy. But the costs and risks were huge. Building and running the massive, secure 247 tech infrastructure needed, operational risks.
And the UK's place in the world.
Yeah. If the UK steps back while the EU, China, India, and others push ahead, what does that mean for the international role of sterling? For London as a financial center, that's another big unknown. And this constant reevaluation weighing uncertain benefits against very real costs and risks is likely what's driving the bank's current stance, especially if they think the private sector might deliver similar gains anyway. And our research partners at Expert Trader UK confirm this assessment is constantly being updated as the global picture shifts.
So pulling it all together, this whole UK digital pound saga really does seem to encapsulate these massive global questions about money's future, doesn't it? That balance between public control and private innovation, navigating public fear versus potential progress.
Precisely. It's a case study showing that technical feasibility and potential economic benefits aren't enough on their own. Public acceptance, particularly around incredibly sensitive issues like privacy and state control, is absolutely paramount. And the sheer speed of private sector innovation has clearly forced a major reassessment of whether a state-backed digital currency is the right tool right now.
It's a truly fascinating and still unfolding moment in monetary history. Whether the UK's cautious approach ultimately proves wise or a missed opportunity. Well, that might depend heavily on how well private companies actually deliver the benefits of digital money without introducing new risks or leaving people behind. What do you think this means for how we'll all manage money in a world that just keeps changing faster and faster?
That's the multi-trillion-dollar question, isn't it? The one central banks everywhere are wrestling with right now.
Well, we hope this deep dive has given you a clearer picture of this complex and fast-moving story. If you found this discussion useful, please do like and subscribe to The Deep Dive for more explorations like this. And just a reminder, everything we've discussed here is for educational purposes only. It is definitely not financial advice.
And finally, a huge thanks again to the team who did the groundwork for this analysis. We couldn't bring you these insights without the comprehensive research provided by the dedicated folks at Expert Trader UK. They really are the unsung heroes behind our discussions.